Hello, everyone. Welcome to another edition of the 3X Value Growth Podcast. My name is Carrie Sauls, coming to you as always from New Hampshire. My piece of New Hampshire trivia for this episode is that Alan Bartlett Shepard Jr., the first American to travel in space, is from Derry, New Hampshire, my town. I'm joined today by Kyle Kadish of Advantage Wealth Solutions. First, very much welcome, Kyle.
Thank you very much, Carrie. I'm glad I could be here today.
I am so glad you are, really. I know how busy your schedule is and just finding time to make this happen. I really appreciate you finding the time where you are so much in demand. I feel we're really fortunate to have you here for this interview. Thank you again. And so everyone else appreciates what you bring to the table, Kyle. I just wanted to tell them that since 2004, Kyle has worked with investors to take advantage of investment opportunities across all markets. His focus has been introducing investors to strategies, securities, and investment structures to enhance their portfolios. With a focus on the Internal Revenue Code, he structures transactions and utilizes investments that allow taxpayers to keep more of what they've created and built, deferring, mitigating, and reducing tax liabilities. So I think it's perfect that your title for our 7-minute interview today is Controlling Your Taxes. Very, very nice. And we're going to do that in just 7 minutes, right?
We certainly are, but I got to say, whenever I'm hosting a continuing education session and bring up the idea of taxes, I need to lock the room just so people stay in and pay attention.
Well, we want them excited, not fearful, so we'll work on that.
Sure.
Definitely. So we're going to get started. And the first question is, who's your ideal client?
Yeah, it could be very general and broad, just to say anyone that has a near-term liquidity event. But more in particular, Carrie, it comes down with anyone that has the tax liability being created from that event. Business owners, real estate investors are the two areas where most of my clients are in. When it comes down to the business owner, it's really looking for someone who's maybe selling in the next 6 months or so, and with a mid-market valuation of the company, somewhere between $4 and $9 million is where we can provide the most efficiency of the tax code. However, where it really makes sense could be anyone who has $250,000 or more generating tax liabilities for them on the sale of an asset.
So you're telling me that they need to speak to you at least 6 months before a transaction would occur?
Not necessarily 6 months. I would say we can conduct transactions in much less time. I think that provides all parties enough enough of a review period. We don't really need to be working with anyone longer than that time frame because they're working with other professionals to build their enterprise.
So number 2, what problem are you solving for these business owners and individuals?
Yeah, it really comes down to the taxation upon the sale. We're helping them retain more of the pre-tax dollars that can be utilized post-sale. Again, I mentioned business owners, real estate, but it could even work for individuals who are selling collectibles. We really work on as I said earlier, the mid-market business owner, but for a lot of those individuals, they will also maybe own a vacation home or investment property, and we can actually help consolidate those assets on a pre-tax basis after the sale too.
Okay, well, we're 2.5 minutes in. Number 3, what are the typical symptoms that you see that people are experiencing or that they start talking about? That made you laugh.
Yeah, I think we all know and understand that we have an obligation to pay some taxes, but many individuals I speak with, Carrie, feel they pay too much, or it's not necessarily their decision as to how much they pay. So business owners have been paying taxes, the payroll taxes, property taxes, profitability taxes, depending on which state they were in. And upon exit, they don't want to give up more of that value that they've created over the life of that business. Sometimes upon the sale, the markup could be 40 to 50% just because the seller has a net number. We're also not able to help them keep more of that of that gross, but maybe even they can take a little less than they would want to market because we're going to have greater use of that capital. So the company becomes more marketable.
But I also think I just heard you say that they could take a little bit less because they won't be giving away extra to Uncle Sam.
Correct, whether it's Uncle Sam or their own state taxes, the states as well that they might be subject to. Correct. So we're not avoiding taxes in any way. Rather, it's structuring when you pay the taxes and how much you pay.
Got it. So we're on to question number 4. What do you see are the most common mistakes that people are making when they try to solve this on their own?
Yeah, it really comes down to they don't know what they don't know. Not faulting anyone at all or placing blame here, but a lot of the professionals they might be working with, let's just use an accountant example. If an accounting practice has 150 households, how many of them in any given year will be going through a liquidity event? It's a de minimis number. So you might be the only client going through this situation. So it's not something necessarily the accountants focus on. What we're able to do is make the accountant more of a scorekeeper or maker instead of the scorekeeper. Also with business brokers, we can make them more honest in the sale because we're closer to that true value of what the client will have after the sale.
Then question number 5. What is one valuable free resource that audience members can implement right now to start solving the problem?
Well, as I continue to work with you and other great professionals and advisors like Doug and Jason, they have an idea in mind of what their exit will be. They should be working with their accountant and financial advisor now to start harvesting the losses from other parts of their portfolio, which can be carried forwarded to offset that gain. Just a little here on capital markets in the stock, let's just say the S&P 500. Historically, 30 to 40% of the names in the S&P have been negative on any given year. So you could sell those stocks and carry forward those losses until a point in time to offset gains.
That's perfect. Therefore, my next question for you is, what is one valuable free resource you can direct people to that will further help with that problem? Where can they go to get more from you?
Yes, certainly through our website, mydstplan.com/KT Kadish. It's posted attached to or in the description of this podcast, but that's where we just begin the conversation. As I mentioned earlier, every situation is different, and we want to begin having that conversation to see if this actually makes sense for the business owner or real estate investor. I'll also add that there's no charge or any fee until the transaction actually happens. It's been leading up to it.
So then my last question is, what's the one question I should be asking you that would give great value to our listeners? And then tell us the answer too, please.
Yeah, sure. Carrie, this comes up all the time when I'm having conversations with those business owners or the real estate investors. Why haven't I heard this before? And I can't answer that, but I can say that it's been codified in the Internal Revenue Code for over 90 years. My colleagues and the partners I work with have been focused on this for a quarter century, and it's been proven and tested by the IRS. Thousands of transactions and billions of dollars that we're allowing those taxpayers to continue making productive use of in a pre-tax basis.
That's huge, definitely. Thank you so much. I really appreciate your time today. It's been a pleasure to have Kyle Kadish here on the 3X Value Growth Podcast. Kyle.
Carrie, thank you for having me, and listeners, thank you for tuning in.
Thanks for checking out the 3X Value Growth Podcast. If you like what we're doing here, head over to iTunes and subscribe, leave us a review, or rate us. It's very much appreciated. And if you'd like to learn more about the 3X Value Growth model, go to www.3xvaluegrowth.com/model for the PDF.